Oil prices spiked on Monday to the highest level in 4 months. However, the rapid rally was followed by the expected downward correction. Yesterday, Brent crude closed with a 7.2% slump to $64 a barrel. Nevertheless, the downside remains limited as investors do not rule out further counter-strikes from Saudi Arabia. Oil prices pulled back after Saudi Arabia tried to reassure the markets. The energy minister said the 2 oil facilities destroyed by the drone attacks on Saturday would be restored by the end of the month, so the oil production in the country will recover to its full capacity in 2-3 weeks. To sum up, crude oil is set to trade lower amid the lack of news from the Middle East. Besides, a waning global demand for oil casts a shadow over oil prices. Indeed, on the back of the reeling global economy and lingering conflict between the 2 largest energy consumers, the US and China, oil prices should be much lower than the current levels. Yesterday's report from the American Petroleum Institute sparked off concerns among investors because the U.S. crude supplies unexpectedly rose by 592,000 barrels for the week ended September 13. The median forecast suggested the opposite change, a fall of 2 million barrels. A decline in oil prices has been bearish for the Russian ruble. The dollar-ruble pair rebounded from July's lows and corrected upwards at near 64.40. The ruble is expected to consolidate at around the current level, gaining support from the tax filing period in Russia. The ruble could also strengthen if the Federal Reserve cuts interest rates. Trade at a profit with InstaForex. Keep track of the latest news on our TV channel. Stay tuned.